Have you ever watched your trading account slowly bleed out, one bad decision after another, wondering what separates the market legends from the countless traders who fail? What if I told you there's a single principle so powerful that it's responsible for building more trading fortunes than any strategy, indicator, or system ever created? Has this ever happened to you? The market is moving, prices are fluctuating, and you feel that irresistible itch to place a trade, any trade, because sitting on the sidelines feels like missing out. Your finger hovers over the buy button, your heart races, and you jump in, only to watch the market immediately reverse against you. This isn't just bad luck. It's a fundamental mistake that destroys more trading accounts than anything else. The truth about trading success might shock you. While most people are searching for the perfect entry strategy or the holy grail indicator, the world's greatest traders built their fortunes on something entirely different. They mastered the art of doing nothing. That's right. The #1 rule that created legendary wealth in the markets isn't about knowing when to get in. It's about knowing when to stay out. Every losing trader I've ever encountered shares one fatal characteristic: impatience. They believe that being active means being smart, that constant participation somehow translates to profitability. Stay with me until the end, because this misunderstanding is costing traders millions every day. The market doesn't reward effort. It doesn't care how many hours you stare at charts or how many trades you make. It rewards patience, the discipline to wait for those rare moments when everything aligns perfectly. Think about this. What if trading success isn't about what you do, but what you don't do? The professionals understand something the public doesn't. Trading without a crystal-clear setup isn't trading at all. It's gambling. And the hardest skill to master isn't taking losses or finding entries. It's sitting on your hands when the market tempts you with noise and movement. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the globe. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. What you're about to discover might surprise you, especially if you've been conditioned to believe that more trading means more profit. The wealthiest traders in history made their millions by trading less, not more, by waiting for those perfect setups that might only come once or twice a month. Let me ask you something that might change your entire approach to the markets. What if the best position isn't long or short, but completely out of the market? What if your most powerful edge isn't a sophisticated strategy, but simply the patience to wait until risk and reward are undeniably in your favor? As we dive deeper into this transformative principle, you'll discover why the most profitable traders spend more time watching and waiting than they do actually placing trades. You'll learn to recognize the subtle difference between genuine opportunity and expensive market noise. Let me show you something that transformed my own trading journey. When I first started, I thought successful traders were constantly in the market, making dozens of moves every day, catching every swing. What a revelation when I discovered the complete opposite was true. The market's hidden truth is that it rewards patience, not participation. This single mindset shift completely altered my approach and my results. Think about the typical amateur trader's day. They wake up, check pre-market action, and immediately look for something, anything to trade. They believe that being busy equals being profitable. It's a dangerous illusion that feeds directly into the market's perfect trap. The reality, those rare, high-probability setups that actually build fortunes might only appear once or twice a month, not every day, not every hour. The amateur wants to eat 3 meals daily from the market, demanding consistent profits on a schedule. But the market doesn't serve meals when you're hungry. It serves opportunities when it's ready, and only to those with the discipline to wait. This waiting game challenges us at a deep psychological level. Our modern world has programmed us for instant gratification, constant action, and continuous feedback. The market, however, operates on its own timeline, indifferent to our need for activity. This fundamental disconnect creates the perfect breeding ground for the most destructive force in trading: fear of missing out. I've witnessed countless traders make this critical error. They see a candle break a resistance level and immediately jump in without confirming volume patterns, without considering the broader market context, without waiting for proper validation. In that moment, they're not executing a strategy. They're reacting emotionally to a fear that the market will move without them. That fear, that desperate need to be involved, is precisely what the market preys upon. When you trade from this emotional state, you're not making decisions. You're acting on impulses. And impulse-driven trading almost always leads to the same outcome: diminishing capital and growing frustration. Behind every emotional trade lies a fundamental misunderstanding about what creates consistent success in markets. Trading isn't about catching every move. It's about catching the right moves. It's about quality over quantity, precision over activity. The professionals understand this intuitively. They've internalized the uncomfortable truth that doing nothing is often the most profitable position. Consider this: every time you enter a trade without a clear setup, without overwhelming evidence in your favor, you're not just risking capital. You're actively reducing your odds of long-term success. Each impulsive entry becomes a small decision that collectively determines your trading destiny. Now, I want to go even deeper into this topic and show you exactly how the market telegraphs its real intentions to those patient enough to listen. I'll reveal the subtle signals that separate genuine opportunities from expensive market noise, and how recognizing these differences can completely transform your trading results. If this perspective is challenging your current approach to the markets, type "patience pays" in the comments below. Let's talk about something that changed my entire perspective on trading psychology. There's a critical moment in every trader's journey that separates the professionals from the amateurs. It happens during those quiet, seemingly uneventful market periods when prices drift sideways without clear direction. These are the moments that truly define your trading destiny. When the market goes quiet, when the tape is dull and prices move without conviction, the amateur sees boredom, the professional sees danger. These periods are where capital preservation becomes your primary mission. Why? Because dull markets are breeding grounds for false signals. They create the perfect illusion of opportunity when there's actually nothing but noise. Think of the market as a living, breathing entity. Sometimes it sprints forward with purpose and direction. Other times it's merely catching its breath. Learning to distinguish between these states is perhaps the most valuable skill you can develop. The revelation that changed my own results was understanding that the market's breathing patterns tell a deeper story than its occasional sprints. This is where a profound mindset shift must occur. Most traders view capital as a tool for making money. The elite view it as something far more precious: their lifeline, their ammunition, their future potential. They protect it with the vigilance of someone guarding their most valuable possession, because that's exactly what it is. Ask yourself this question honestly. How many times have you entered a trade simply because you were bored? That small, seemingly harmless decision, what I call the entertainment trade, is often the first step toward destructive habits. One impulsive entry becomes two become a pattern, and patterns become automatic behaviors that bypass your rational decision-making process entirely. Behind every great trader stands the invisible architecture of disciplined habits. What appears to others as exceptional skill is often just the consistent application of sound principles. You can actually be wrong half the time and still build substantial wealth if your timing and position sizing discipline remain intact. But neediness, that desperate urge to be in the market, will erode even the most brilliant strategy. The market has a particular sensitivity to neediness. It seems almost designed to punish those who can't stand being on the sidelines. This isn't mystical thinking. It's the natural consequence of entering without edge, of confusing activity with productivity. Every impulsive trade reduces your mathematical expectancy, slowly transforming what could be a profitable system into a losing one. If this trading wisdom resonated with you, hit that subscribe button to join thousands of traders who've transformed their results through these principles. I share these battle-tested insights directly from my trading journey to yours. What's fascinating is how this principle extends beyond trading into every area of achievement. The capacity to do nothing when nothing is needed is rare and valuable across all disciplines. It represents a higher level of mastery, the understanding that restraint often accomplishes more than action. Let me show you how to recognize those pivotal moments when the market transitions from breathing to sprinting, from noise to opportunity. These transition points are where fortunes are made, but only for those who've preserved their capital during the quiet periods. If you've ever found yourself making trades out of boredom rather than conviction, type "guilty as charged" in the comments below. There's a fascinating psychological illusion at play in nearly every trader's mind, a mental mirage that creates a dangerous connection between activity and progress. Our brains are hardwired to equate motion with achievement, busyness with productivity. This illusion is so powerful that it creates a strange comfort in simply doing something, anything, even when that activity leads nowhere. This mental trap is particularly dangerous in the markets because, unlike almost every other area of life, more effort often produces worse results. The revelation that transformed my own trading journey was understanding this counterintuitive truth. The markets don't reward activity, they reward precision. They don't respond to your feelings of urgency or your need for action. They only respect structure, volume, timing, and trend. Behind the scenes of every great trading fortune lies this hidden truth. The best money doesn't come from quick reactions or constant participation. It comes from the trades you patiently waited weeks for, sometimes months. These are the setups that materialize so perfectly that they almost feel inevitable. They appear only to those who've developed the rare capacity to remain still while others exhaust themselves chasing shadows. This brings us to perhaps the most powerful metaphor for understanding successful trading psychology. Your capital is your army. Each dollar represents a soldier under your command. The amateur general sends troops into every skirmish, depleting resources on battles of little strategic importance. The master strategist conserves strength, studies the terrain, and deploys forces only when victory seems almost certain. When the battlefield is unclear, when market direction lacks conviction, or when key levels are being contested without clear resolution, the wise general stands still. This patience isn't passive, it's intensely active on a mental level. You're observing, analyzing, preparing, but not engaging. You're allowing others to exhaust themselves first, to reveal their positions, to make critical errors born of impatience. The transformation in your results will come when you truly internalize this military mindset toward your trading capital. Every position you take is a strategic deployment with specific objectives. Every dollar at risk should have a clear purpose and a well-defined exit strategy, both for success and failure. What's remarkable is how the market reveals its intentions to those patient enough to listen. The tape, The moment-by-moment flow of prices and volume always tells you when the tide has turned. But these signals aren't shouted, they're whispered. They become visible only when your mind is quiet enough, patient enough to perceive the subtle shifts that precede major moves. Consider the journey of every great trader you've studied. What did they all share? Not necessarily the same strategies or even the same markets, but rather this profound respect for capital preservation and deployment. They understood that trading is not a game of constant activity, but one of strategic patience, punctuated by decisive action. Let me show you how to recognize those precious moments when the market's whispers become clear signals, when the fog of uncertainty lifts to reveal genuine opportunity. These are the crossroads where trading legends are born. If this military approach to capital management resonates with your trading experience, type strategic patience in the comments below. Many traders fundamentally misunderstand what patience in trading truly means. They view it as passive waiting, as empty time spent doing nothing. This profound misconception has cost countless traders their accounts. The revelation that changed my entire perspective was understanding that true patience isn't passive at all. It's intensely active preparation. This shift in mindset transforms your relationship with the market. Every moment you spend outside of positions becomes valuable opportunity, not for profit-taking, but for preparation. Think about the master craftsman who spends more time sharpening his tools than actually cutting. This isn't wasted time, it's essential investment. In trading, your most valuable tools are your analytical skills, your emotional regulation, and your strategic thinking. During these periods of non-trading, the professional is engaging in deep work, studying price action with scientific precision, identifying structural patterns, refining entry and exit criteria, and mentally rehearsing scenarios. They're building the mental map that will guide them when genuine opportunity emerges. What looks like inactivity to the amateur is actually intense preparation happening beneath the surface. This disciplined approach creates an almost supernatural clarity when the moment to act finally arrives. You won't need to guess, hesitate, or second guess. The decision almost makes itself because you've already done the hard work of preparation. The trade becomes an automatic execution of a plan formulated during quiet times. Behind this approach lies a fundamental understanding that many traders never truly grasp. You cannot impose your will or timeline on the market. There's a natural rhythm to price movement that operates independently of your desires or needs. You can't rush the market into revealing its direction any more than you can rush the seasons to change. The market moves when it wants to, not when you want it to. This single truth has been the downfall of countless trading accounts. The amateur gets impatient, tries to force opportunity where none exists, and eventually pays the price for this arrogance. The professional understands that aligned action, moving in harmony with the market's own rhythm, is the only sustainable path. This perspective represents a profound surrender of ego. In almost every other field, we're taught that determination and effort can overcome obstacles. We believe we can make things happen through sheer force of will, but the market operates by different rules. It doesn't respond to your effort or desire. It doesn't care about your timeline or financial needs. It moves according to its own complex dynamics. The journey toward trading mastery is largely about internalizing this humbling truth. It's about developing the rare capacity to synchronize your actions with the market's natural rhythm rather than fighting against it. This synchronization is not a skill that can be acquired quickly. It's developed through observation, experience, and countless hours of watching price movement without interference. What's fascinating is how this principle extends beyond trading into life itself. The wisdom of knowing when to act and when to wait, when to advance and when to hold position applies to nearly every domain of achievement. It's a universal truth disguised as a trading principle. Let me show you how to recognize those precious moments when the market begins to reveal its true intentions. Those subtle signals that tell you the waiting period is ending and the time for decisive action is approaching. If you've experienced that moment of perfect clarity when patience finally pays off in a trade, drop a perfect timing in the comments below. Let me share a revelation that completely transformed my trading journey. A perspective shift that moved me from constantly struggling against the market to flowing with it. There's a fundamental difference between prediction and confirmation that most traders never truly grasp. The market doesn't reward those who try to outguess it. It rewards those who learn to read its language. Think about the typical approach most traders take. They analyze charts, indicators, and news, trying to predict where price will go next. They essentially place bets on future direction before the market has revealed its hand. This predictive approach feels intelligent. After all, isn't trading about anticipating moves? But this mindset creates a subtle adversarial relationship with the market, positioning you as someone trying to outsmart it rather than understand it. The breakthrough moment in my own development came when I realized the market doesn't pay you for guessing. It pays you for understanding its behavior. This represents a profound shift from prediction to confirmation. Instead of trying to forecast what will happen next, you wait for the market itself to tell you where it intends to go, and then you align yourself with that intention. This shift has powerful psychological benefits. It removes the burden of having to be right about future direction and replaces it with the simpler task of recognizing what's already happening. It transforms trading from a predictive art into an observational science. But here's where the true mastery comes in. The market always telegraphs its intentions, but it does so quietly, through subtle signals that most traders miss because they're too busy predicting rather than observing. These signals are like whispers in a noisy room. Only those who have learned to quiet their own mental chatter can hear them. You must develop the capacity to read these subtleties. The slight hesitation before a significant breakout, the gentle acceleration after a breakout successfully holds, the subtle change in rhythm when volume begins to expand at precisely the right moment. These micro patterns aren't random, they're the language of the market telling you exactly what's about to happen. What fascinates me is how these subtle shifts often precede the most profitable moves. The amateur trader is waiting for the obvious signal that everyone can see, but by then, much of the opportunity has already passed. The professional is attuned to those first quiet notes, the earliest indications that smart money is beginning to position itself. Ready to master the psychological edge that built trading fortunes? Subscribe now and join our community of disciplined traders who understand that patience isn't just a virtue. It's a strategy that pays. This observational approach represents a complete identity transformation for most traders. You stop seeing yourself as someone trying to predict or outsmart the market and start seeing yourself as a skilled interpreter of market language. You're not fighting against the market's movements. You're simply reading them with enough skill to position yourself advantageously. The decision to wait for confirmation rather than prediction doesn't mean you miss opportunities. It means you take only the highest probability ones, the ones where the market has already begun to show its hand. This patience allows you to enter with greater size and confidence because you're not guessing, you're responding to what's already unfolding. Let me show you how to recognize those critical transition points where the market moves from indecision to commitment, from ambiguity to clarity. Those precious moments when the smart money begins to move with conviction before the crowd has even noticed. If you've ever noticed that feeling of certainty when The market finally shows its hand. Type "reading the signals" in the comments below. There's an almost imperceptible line between a brilliant entry and a disastrous one, a threshold that often comes down to a matter of patience measured in minutes, not days. This subtle timing difference represents one of the most overlooked aspects of trading mastery. The enlightenment that changed everything in my own journey was recognizing that the difference between a good entry and a premature one is often just a few price bars. But that small gap can mean the difference between significant profit and unnecessary pain. This revelation isn't just about technical precision. It's about the profound interplay between awareness and discipline. Early recognition of potential setups is valuable, but only when paired with the discipline to wait for full confirmation. Many traders spot emerging patterns correctly, but sabotage themselves by jumping in too soon, before the setup has fully materialized. They see the first signs of opportunity and their eagerness overrides their judgment. Think about this from the perspective of personal transformation. Trading success often doesn't require learning more patterns or indicators, but rather mastering the space between recognition and action. That momentary pause where you resist the urge to act prematurely becomes your greatest edge. When I finally understood this principle, my trading changed forever. I began seeing setups forming early, but developed the mental discipline to wait until all conditions aligned perfectly. What happens when your patience and preparation converge at the right moment? Something almost magical. When your setup finally clicks, when all the elements fall into perfect alignment, you can strike without hesitation, without doubt, without the second guessing that plagues so many traders. Your entry feels almost inevitable rather than forced. This brings us to perhaps the most counterintuitive principle that separates market professionals from the struggling masses, the understanding that cash itself is a legitimate position. The financial world constantly bombards us with the message that we should always be invested, always be in the market, always be doing something. Yet behind the scenes, the best traders I've ever known spend far more time not trading than trading. This perspective represents a complete paradigm shift. Most view cash as dead money or a missed opportunity. The professionals see it as potential energy, stored power waiting to be deployed at precisely the right moment. When you're sitting in cash, you're not out of the game. You're simply waiting for the odds to stack overwhelmingly in your favor. The market operates on a fundamental truth that challenges our cultural programming. It doesn't pay you for effort, activity, or desire. It pays you for timing. Every dollar preserved during unfavorable conditions becomes ammunition for when genuine opportunity emerges. This patience isn't about fear or hesitation, it's about strategic positioning. What's fascinating is how this principle creates a psychological advantage. When you're fully in cash, your perception clarifies. You see market movements objectively rather than through the distorted lens of existing positions. You're free from the emotional attachment that clouds judgment when capital is already committed. This mental clarity becomes a competitive edge that most traders never experience because they're perpetually positioned. The journey toward mastering this concept involves a deep identity shift. You must stop seeing yourself as a trader who needs to trade and start seeing yourself as a capital allocator who deploys resources only under optimal conditions. This subtle redefinition transforms your relationship with the market. Let me show you how to recognize when the market is truly offering a gift versus when it's setting a trap. Those critical moments when moving from cash to a committed position is the only logical choice. If you've experienced the clarity and confidence that comes from staying in cash until the perfect setup appears, type "cash is a position" in the comments below. There's a profound clarity principle at the heart of all sustainable trading success. A line in the sand that separates the professionals from those who never quite make it. The revelation that transformed my entire approach was understanding that you should never, under any circumstances, trade when the market's direction is unclear. This principle sounds deceptively simple, yet it's violated constantly by traders at every level. Think about those moments when the market is choppy, indecisive, or moving sideways in a tight range. The amateur sees these conditions and thinks there must be an opportunity here somewhere. They force trades, trying to extract profit from confusion. They convince themselves they can see clarity where none exists. But this is a dangerous illusion. When the market doesn't know which way it wants to go, your job isn't to guess or predict. Your job is to step aside. The market pays the trader who can wait until the picture sharpens, not the one who trades out of confusion. This waiting period isn't just about avoiding losses, it's about preserving mental capital. Every trade you take in unclear conditions burns decision-making energy and emotional resilience. By the time genuine clarity emerges, you're often too exhausted or depleted to capitalize on it. Behind the scenes of every great trading career lies this hidden truth: the willingness to embrace uncertainty without trying to resolve it prematurely. The amateur feels compelled to form an opinion on every market movement. The professional remains comfortable saying, "I don't know yet," and that's perfectly fine. This acceptance of temporary uncertainty represents a profound mindset shift from prediction to observation. What's remarkable is how the clarity principle extends beyond trading into every domain of decision-making. Knowing when information is insufficient for action and having the patience to wait until it isn't represents a rare form of wisdom. It's the courage to remain undecided until decision is truly warranted. Now let's address perhaps the most essential element that binds everything we've discussed: discipline. It's not your strategy, indicators, or charts that ultimately determine your trading destiny. It's your discipline. At its core, trading success comes down to knowing when to act and when to stand still, and having the mental fortitude to honor that knowledge consistently. Discipline in trading isn't just about following rules. It's about developing an almost intuitive sense of market rhythm. When you find yourself wondering which way the market will go, that uncertainty itself becomes your most reliable signal to wait. This isn't weakness or indecision, it's wisdom. The market will reveal its intentions when it's ready, and your job is never to rush that revelation. The journey toward mastering discipline represents the deepest form of personal transformation. It requires confronting our hardwired tendencies toward action bias, our discomfort with uncertainty, our fear of missing out. It asks us to develop a relationship with patience that runs counter to nearly everything in our fast-paced culture. What fascinates me is how this disciplined waiting creates a competitive advantage that compounds over time. While others exhaust themselves fighting the market's natural rhythm, the disciplined trader conserves energy, preserves capital, and maintains clarity. When the moment for action arrives, they move with conviction and focus while others are depleted. Let me show you how these principles of clarity and discipline converge to create those rare, perfect trades, the ones where entry, management, and exit flow together in almost effortless harmony. If you've experienced that moment of perfect clarity, when the market's direction suddenly becomes obvious after a period of confusion, type "waiting for clarity" in the comments below. As we've explored this fundamental rule that built trading fortunes, I hope you've recognized parts of your own journey in what we've discussed. The path to trading mastery isn't about finding the perfect indicator or strategy. It's about developing the discipline to do nothing when nothing is called for, and to act decisively when the market finally shows its hand. This principle of strategic patience has transformed not just my own trading, but the results of thousands who've implemented it. The difference between consistent profitability and perpetual frustration often comes down to this single rule: knowing when to stand aside. If you found value in these insights today, consider joining our community by hitting that subscribe button. Each week, I share these hard-earned trading truths, the kind that took me years of painful lessons to discover. I'd much rather you learn from my mistakes than repeat them yourself. Did this message feel like it was speaking directly to your trading challenges? If so, leave a comment saying, "Patience is my edge." I personally read every comment and would love to hear which part resonated most strongly with your experience. If this conversation has helped shift your perspective, that like button is a simple way to let me know these insights are making a difference. Each like helps these trading principles reach other traders who might be struggling with the very same issues. There's a video right here about the 3 specific market conditions that create the perfect entry point. It's the perfect complement to today's discussion about when not to trade. Click and continue with me over there to complete the other half of this trading mastery equation. I'll see you in the next video.